morning, you're watching Business World Live. I'm Danie, Laurel.
And I'm Jess Delos Santos. Here are the biggest stories to kickstart this trading day Thursday. The Bangko Sentral will hold its rate-setting meeting today just as the peso slumped to its lowest level in nearly 17 years.
Now, with investors cautiously awaiting the Bangko Sentral's policy decision, the local bourse sinks below 6,200.
Incoming NEDA Chief Arsenio Balisacan admits it may take quite some time for the Philippines to hit its goal of becoming an upper-middle economy. Balisacan says this status may finally be achieved in 2024, which is 2 years behind the original target.
And here's a rosier outlook. Moodys Analytics hikes its GDP forecast for the domestic economy to more than 7% this year. We begin our broadcast with the Philippine peso continuing its losing streak and even falling to its lowest level against the dollar since 2005.
Economists expect the local currency to depreciate further this year. Mobile journalist Pamela Vasquez with the rest of the story.
The Philippine peso slumped to its lowest level in nearly 17 years as the US dollar continued to appreciate. The local currency touched 54 pesos 63 cents to the dollar at one point during trading on Wednesday before closing at 54.47. That was the peso's weakest level since November 2005 and marks the sixth straight day of the currency depreciating. Economists say this doesn't necessarily benefit OFW families because higher prices of basic goods will offset their gain.
Their beneficiaries of remittances get a little more peso, but because of the inflation dynamics, that purchasing power is probably just washed out.
The dollar has been strengthening because the U.S. Central Bank decided to raise interest rates by a lot. Investors want to see the same kind of aggressiveness from the Bangko Sentral, but incoming Governor Felipe Medalla has already said they will do it gradually. This happened in 2018 too, when the Federal Reserve and BSP took different paths, causing the peso to drop more than 9%.
We see the peso depreciating to 56 because it doesn't seem like the BSP seems to care.
The last time the peso hit the 56 level was 2004 under President Gloria Macapagal Arroyo. The BSP is set to hold its next policy meeting on Thursday. Already, big business groups are warning of a chain reaction given the continued increase in oil prices.
Chain effect sa mga bagay, no? Mga transportation, cost of productions, tataas siya ng without any added factors just because of the exchange rate.
Mobile journalist Pamela Vasquez, We Are One News.
Incoming Socio-Economic Planning Secretary Arsenio Balisacan is optimistic that the country will finally become an upper-middle income economy by 2024. Balisacan tells Business World editors that, quote, it may take a while for the Philippines to achieve this classification. He says the goal will likely be achieved if the economy grows 7% next year. This is in contrast to the projection of outgoing NEDA Chief Carl Kenrick Chua, who earlier said that the Philippines will become an upper-middle income economy by next year. The country originally targeted to attain upper-middle income status this 2022, but this was derailed by the pandemic. Is this already the lowest it can go, or should the local currency brace for more pain ahead? Let's get insights from AJ Montesa, Program Officer of the Action for Economic Reforms. AJ, good morning. Thank you for joining us.
Yes, good morning, Jess and Danie. Thanks for having me.
Okay, again, we kick things off with this bit of news. You have the peso inching to its lowest in 16 years amid the dollar, of course, strengthening due to higher interest rates. How low can the local currency go, and until when do you see it weakening?
All right, so I think it's important to point out the fact that our exchange rate is determined by the market. So the Bangko Sentral does not control or determine the peso-dollar cross rate, but rather it responds to the market forces. So for example, if more investors are more likely to invest or buy U.S. Treasury bills, for example, because of their higher interest rates, then that will push the demand for U.S. securities over Filipino securities. So with the recent announcement of the Federal Reserve that they're going to hike their interest rates by 75 basis points, that makes U.S. securities more attractive to foreign investors. That's why we're continuing to see that the peso exchange rate is going to go up.
What are your sentiments on the current or the yesterday's pronouncements of Powell, where analysts are basically saying maybe there's going to be a soft landing after these 275 bip hikes and it's not going to be prolonged? Do you see stabilization by the end of the third quarter?
Right, so I think we have to look at the context as well. So remember that during the pandemic, there were already many people who were already calling for interest rate hikes, even in 2020 and even in 2021. But Powell did not push through with these hikes. And that's why right now, the U.S. pushed for a high interest rate hike. And some economists in the United States are even saying that they need to push for a recession to happen because of the inflationary pressures. So right now, the inflation in the United States is at 8.6%, which is much higher than what we have here. That's why we're going to see these interest rate hikes. No, so I think that context is important. That's why, for example, if you contrast this to what the BSP by Governor Jokno and incoming Governor Medalla have been saying, they're going to be more gradual with the interest rate hikes here in the Philippines, because I think they're going by the data as well. They're looking at our inflation figures and they're saying, well, inflation is not as bad as in the United States. It's more stable. We have a better outlook. We're not as affected by the food supply shortages that are happening in Ukraine and Russia, for example. So we're more resilient to that, and we don't have to resort to a one-time large increase of 75 basis points. We can resort to more gradual increases of 25 basis points at a time.
But AJ,
Go ahead,
is
Dan.
that the right way to go? Because there was a lot of criticism on the Fed that they acted too late and now naging 75 bips instead of this gradual thing that they were hoping to achieve. And now you even have some analysts predicting a 50 basis point hike later on is still on the table. Do you think that that might be a better thing to do preemptively, knowing that the inflation is likely to go up?
Yes, I still think that the BSP's current strategy of being more stable and being more predictable is more sustainable on our end. Again, we have a different context. We have different supply chains that we're relying on compared to the United States. Although we're feeling the impact of fuel supply shortages, for example, our food supply is not as feeling the effects as badly. Our rice inflation, for example, was just at 1.5% compared to the overall inflation rate of 5.4%. So on many of the supply chain issues, we're more manageable. But at the same time, we also have to balance the interest of pushing our economy forward, right? So we've experienced positive and significant growth for 4 straight quarters now. But in 2022, that's when we'll know that we've already moved past the pandemic, because we're still feeling the impact of the base effects. So I think there's still a need for us to continue to push our economy towards recovery and to push our economy forward. As mentioned earlier, we're trying to reach middle income status by 2024. So we need to really push our demand still. Of course, as inflation goes higher, we can temper that a little by introducing several interest rate hikes at gradual increases.
Okay, AJ, just to be more direct to the point here, what do you think would be the worst case scenario here for the peso? At what level do you see it weakening? What for you would be the bottom here for the local currency? And what would that mean, especially as elevation scenario remains elevated?
Honestly, I don't think I can give a bottom scenario. Again, it's hard to predict markets at this rate. I think the United States, given their drastic increase in their interest rate hikes, the impact of that is we're going to see some devaluation again, or rather, we're going to see the peso continuing to increase compared to the dollar. But as we also continue to introduce our own rate hikes, then we're probably going to see that stabilize. But there are still a lot of market dynamics involved, and I'm unable to provide you with specific numbers at this time.
What are you watching out for in terms of demand side inflation? Are you already seeing that? Because even if the inflation is elevated in the US, there is a lot of demand, and that's what they've been saying ahead of a possible recession, of course. But here, are we seeing that at all? Are we seeing that the inflation might go up because of the reopening of the economy? And how are you looking at that?
Right, so there's a very different dynamic with the demand push in the United States compared here. For example, in the United States, they did introduce a lot of subsidies ranging in the thousands of dollars, and it really gave a lot of American consumers the ability to spend money. They were able to, for example, pay off their debts. Some of them were able to purchase new consumer goods, durable consumer goods, and a lot of them were able to just spend that money without taking on employment. That's why there was also a job shortage of sorts there. Here in the Philippines, we had a much smaller targeted subsidies, which were really only targeted towards the lowest income families. And we saw that Filipino households spent these more on food and our basic necessities, right? So I think what we're just seeing is as the economy continues to open up, we're seeing a recovery back to the pre-pandemic economic activity. And that's a good thing. That's a good sign. I don't see demand so far as being the main driver of inflation here in the Philippines. It's really more of a cost issue, a cost push issue, especially with the increasing prices of Dubai crude, for example, which increased year on year by 64% compared to last year. It's already at $108 US per barrel compared to around 66 in May of 2021. We're seeing pump prices rise to almost 100 pesos per liter here for gasoline. So these will impact, for example, transport costs. These will impact fertilizer costs, which will in turn probably impact the price of agricultural commodities as well. So inflation-wise, we're seeing some increases in other food commodities aside from rice.
Okay, given that, do you have at least any forecast on when do you see inflation peaking and at what level?
Yes, it's quite difficult to say at this point with the Russia-Ukraine conflict going on. We can expect that oil prices will continue to rise. Although we don't depend a lot on Russian oil supply, we do depend on the OPEC supply. And of course, I think at this point, OPEC is still trying to maximize the profits that they can gain, especially they're trying to recoup the losses that they experienced during the heightened lockdowns in 2020. So it's really difficult to forecast. But right now, I see in the short term, at least, prices will continue to go up, at least for fuel prices.
Okay. Food security as well is going to be a top agenda for the next administration, what with the incoming president at least designating himself as DA chief. What should be on top of the agenda here for Marcos as DA secretary, especially in the first 100 days?
Right. So I think the importance of structural reforms comes into play here. So for example, we passed the rice tariffication law in 2019 that made our rice supply more stable, right? That's why what I mentioned earlier is that rice inflation is just 1.5% compared to the overall headline rate of 5.4%. So we're seeing the benefits of having a more resilient supply chain. But at the same time, the RTL introduced strategic subsidies towards our rice farmers, helping them be more productive through, for example, providing mechanization, providing them with seeds. So I think in terms of our agriculture, what the government or what President Marcos can do is he can provide also strategic subsidies towards the agricultural commodities that are essential to us. So for example, again, rice, but also in the transport sector, we can also introduce strategic subsidies because fuel is a major input to agricultural output, especially in terms of fertilizers, which depend on organic fuels as well.
AJ, I'll just press on that though. Why do you think that we are in a better position when it comes to the food supply chain compared to what you mentioned, other countries like the US? When we did have Department of Agriculture, USEC, on the show a couple of days ago saying that 2022, 2023 will be the food shortage year, and there's a big problem here. But it seems you're not as worried and you're not as concerned about this issue.
Right. So it's not to say that I'm not worried or concerned about the issue. I think food prices will take a hit. I think overall in the overall economy, we're going to see some pressure for rising food prices. However, again, we're going to look at the differences between the context of the United States, which is heavily dependent on United States and Europe and many African countries, which are dependent on Ukrainian grains and Ukrainian wheat, for example. So Ukraine is a major exporter of wheat and sunflower oil, for example. So these are the things that will impact food prices on their end. On our end, our main food staple is rice, and most of our rice is still locally produced, and most of our rice imports are sourced from Southeast Asian countries like Thailand and Vietnam, which although there were reports of them forming a cartel, that has been dismissed already. So we expect more stable food supply, at least from these Southeast Asian countries compared to Ukraine, for example. So relatively, although we're going to experience some food price pressure, it's not going to be as bad as in these other countries. I would, though, caution that although our food price hikes are not going to be as bad, I think these food price increases are going to disproportionately affect the poorest and most vulnerable sectors of the country. So I think those are the areas we can focus on. Let's be more strategic about it and target them specifically.
Okay, given all that we have going for us, at least at this stage, are you as optimistic as the incoming NEDA chief that we are going to achieve that upper middle income status by 2024? I mean, that in itself is already a delay here, but are you as optimistic it's going to happen by that time?
Well, with the data that we have so far, again, we've grown significantly by 4 consecutive quarters now. I think that target is achievable. We do have to make sure that the concerns that we've pointed out so far are addressed. So inflation is something that we need to address. We need to continue to push our recovery. But then we also need to think about, of course, while we achieve our target of getting into a middle income country status, we also have to think about how we will think about our vulnerable sectors, the farmers, for example. So President Marcos has appointed himself agricultural secretary, and that's a high task that he needs to respond to. But at the same time, the poverty impact, for example, of rising prices, of rising fuel prices and transport costs is something that will need to be delicately addressed. So who will be energy secretary, for example? That's going to be an important question as well.
All right. Thank you so much for those updates and those very good insights. That was, of course, AJ Montesa, Program Officer at the Action for Economic Reforms. Thank you, AJ.
Here are the other headlines we're keeping our eyes on. Senate Energy Committee Chairperson Win Gatchalian wants to expand the Pantawid Pasada program to help the transport sector deal with soaring pump prices. Gatchalian says the government may tap unobligated funds from various agencies such as the LTFRB and the DOTR to finance the program. The senator explained that this is still cheaper than scrapping the excise tax on oil.
The immediate solution is to expand the Pantawid Pasada. Ang proposal ko, 3,000 a month for the next 5 months. That will cost us about 4 billion pesos.
Now on to some COVID-19 updates. The Health Department says Alert Level 2 will be implemented in Metro Manila if new cases in the capital reach 800 to 820 per day. Now, Health Undersecretary Maria Rosario Verher tells 1PH that based on their projections, daily cases in the capital could breach the 800 level by July. Verher says Metro Manila may also see a possible peak next month, with daily infections reaching 2,000. Now, as of yesterday, over 300 new COVID cases were recorded in Metro Manila. However, Verher clarifies that the capital region will only reach the 800 level if the current uptrend in new infections continues. She notes that infections will keep increasing if the take-up of booster shots remains low or if the public starts disregarding the minimum public health protocols.
Hindi lang po kaso ang tinitignan natin na numero, kailangan makita din natin na yung hospital admissions ay sumusunod, no, at tumataas din ang admission. Sa ngayon po, hindi po natin nakikita na tumataas ang admission sa ating mga ospital.
Pausing for a quick break, but coming right up. We'll check how the local bourse is moving this morning after it fell below 6,200 yesterday.
More of that and other stories when Business World Live returns. Stay with us.
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danie Laurel.
All right, Dan, the peso in the spotlight today. How is it holding up in early trade on the back of more Fed comments?
All right, Jess. Well, in the short term, it's actually strengthened a touch. So it's now trading at 54.44. So it was, slightly above that. But if you see this long-term graph here, this is 20 years of the peso's performance. And you can see us already inching our ways to those 20-year highs. So we were already touching the 15-year high, and we are well on our way if that trend continues. And of course, the Fed continues to raise its rates, we might be seeing 56 levels, which we hadn't seen since at least 2002. Now, Jess, the other thing to be noting here is that we are not alone. So the currencies have tumbled in the rest of Asia, and you can see that on my chart here. That's really on the back of the strength of the dollar. India's rupee, for instance, all-time low. You've also got the South Korean won that's at a 13-year low, and guess what? The yen, the Japanese yen, is at a 24-year low. So our 15-year lows is basically in the middle of the pack, as was already mentioned by the incoming central governor. Now let's take a look at the index, and that is one bright spot. You can see us bouncing back even as we're still at 6,200 levels here, Jess, but that's already up by 0.6%. Some are saying that we are now in oversold territory, and that's of course this line here below the green line, and finally bouncing back here. And if you take a look at the MACD indicator, that does illustrate that the momentum is towards a buy, at least for today. Now, a couple of stocks I wanted to watch out for. Let's take a look at TKC Metals at 70 centavos. They're looking to sell their China operations for 1.74 billion pesos. So letting go of the metals operations over in China. And finally, I did want to take a quick peek at Emperador. Will they or will they not list over in Singapore? Well, today they're up by 1 4/10%. This, as some sources of ours, according to deals obtained by Bloomberg News, is that they are starting to gauge investor demand over in Singapore for a secondary listing. Emperador trading at 19 pesos and 18 centavos.
Luxembourg-based satellite communication service provider SES has vowed to bring more advanced satellite technology to the Philippines next year. This in a bid to boost our country's digitalization efforts. The company will be bringing into the Philippines its second-generation medium Earth orbit satellites. SES says this technology will support a variety of requirements from major sectors such as mobile network operators, government, maritime, and mining.
Now, Moodys Analytics hiked its 2022 GDP growth estimate for the Philippines to above 7%. That's from 6.1%. Now, recall that the group's original projection was 6.4%, but was later slashed to 6.1%. But after a stronger than expected expansion in the first quarter, Moodys Analytics again revised its forecast upwards this time. The research arm of Moody's Group said economies in the region continue to show resilience in the face of inflation, mainly caused by sanctions on Russia and the COVID shutdowns over in China.
More kasambahays are getting an increase in their monthly wages with the approval of wage increases in NCR. Here's the report.
The Regional Tripartite Wage and Productivity Board of NCR has approved the 1,000 peso wage increase for domestic workers. Because of this, the new minimum wage for domestic workers in NCR is 6,000 pesos a month. The Labor Department says many domestic workers will benefit from this looming wage increase.
This will benefit an estimated 200,000 kasambahays in the National Capital Region, about 60% of which are live-in kasambahays.
The last time domestic helpers got an increase in their minimum wage was in January 2020. That was an increase of 1,500 pesos, which brought the minimum wage to 5,000 pesos. The latest round of increase will be implemented after the wage order is affirmed and published in at least 2 newspapers of general circulation. As of now, 10 regions have implemented wage increases, including Cordillera Region, Ilocos Region, Cagayan Valley, Central Luzon, Mimaropa, Bicol, Western and Central Visayas, Northern Mindanao, and Davao Region. The new wage order increasing wages of kasambahays in Zamboanga Peninsula to 3,500 to 4,000 pesos will be implemented starting June 25. Meanwhile, domestic helpers in Eastern Visayas will start getting a higher minimum pay of 4,500 to 5,000 pesos starting June 27. By end month, domestic helpers in Caraga will get their wage increase for a 4,000 peso minimum wage. Of all the regions, only Calabarzon and Socsargen have yet to have a wage increase approved for kasambahays, as the matter is still under DOLE's deliberation. In all other regions, domestic helpers are urged to submit complaints before the DOLE should their employers refuse to implement the higher wages.
May rule ang NWPC dyan, non-payment of the prescribed minimum wage ay subject sa penalty. They can simply go to the regional boards to file the complaint or the field offices of the Department of Labor.
For News 5, Greg Gregorio, we are One News.
All right, and just one spillover effect here. I think there's more bound to come in the near term at least.
Yeah, Jess, marami ng second round effects of the inflation and wage hikes will be on the table, Jess.
All right, and that's a first look into the business day this Thursday, June 23, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jess Delos Santos.
And I'm Danie, Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.